Good afternoon, and thank you for joining us today. My name is Timothy Lee, and I'm a research analyst at Red Cloud Securities. I'm delighted to host a Red Cloud webinar on gold exploration and development today. We will hear from Terry Harbort, CEO, and Matt Filgate, VP Corporate and Strategic Development of Talisker Resources. During today's webinar, they will provide an overview and outlook. Then we will take questions. You can type your questions into the chat box at any time, and we will get to as many as we can. Before we kick things off, first we need to discuss some fine print. During the Talisker webinar, forward-looking statements may be made. Excuse me. I would direct listeners to the company's forward-looking statements disclosure outlined in the Talisker corporate presentation, and that can be found on the company's website, taliskerresources.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors, and participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on Talisker. So we have Talisker presenting today. Talisker has put together a large land package of prospective ground in southern British Columbia. This covers multiple past producing mines, as well as new earlier stage prospects identified by the company. Talisker has put together a significant initial resource that's open for expansion, and they're well poised to advance toward production. With that, I now turn it over to Terry and Matt to update our audience on the company.
Thanks very much, Tim. Hello, everybody, and thanks very much for joining our first Red Cloud webinar presenting Talisker Resources. What we're presenting today is a really unique opportunity to participate in the growth of Talisker and the transition of Talisker from a exploration company into a production company. And what we're looking at producing is gold out of those lovely veins that you can see right there in the middle of the presentation. That's the BK zone where we'll be initiating production, planning on early 2024, and taking out a stope from there. You can see 71.6 grams, so a good high-grade deposit that we have as our flagship. Run through a few things. Discuss the forward-looking statements. If you're on this call, then you believe that there is a bullish case for gold. We're seeing indications for this coming all around. We see gold heading towards the 2,000 point. So things are looking pretty good over the next couple of years for gold, and we're hoping to see a change in sentiment in the junior marketers, and particularly as we head into production and take that transition from an explorer into a producer. As a company, we've got a very clear pathway to production, and many of the key due diligence checkpoints that you really need to look for when looking at investing in a company. Firstly, we're funded to production. We recently closed a royalty transaction that brought in availability of up to 40 million Canadian for us to take the project forward to production. All of our required permits in place, major mines permits, discharge permits, effluent, everything is already in place. So it's a relatively fast transaction for us from the resource that we've developed to take that across into production. We've got confirmed high-grade recovery in our metallurgy. Historically, at our project, where a large amount of gold was produced, the averages were about 90%. It's been closed for about 50 years. What we see is modern metallurgical techniques has taken that recovery up to 90 to 95%. So very good recoveries. From the work that we've done over the last couple of years, we have a well-known understanding of the deposit geometry and the mining method, the long hole method that we use. It's a very bread and butter style of deposit, a mother lode style. So very well known, very well understood. And we've done a lot of drilling oriented core work to understand where these ore bodies are. And this is combined with excellent structural and grade continuity. So structural continuity is what controls the vein systems. We can see this continuity up to 2.5 kilometers of individual veins along strike, and down to about 2 kilometers was the deepest that we've identified so far. So excellent structural continuity. And then the high-grade grain continuity that sits within those structures. We can see that up to 500 meters along strike and up to 1.5 kilometers down plunge. So very continuous, very well-structured ore shoots. We're currently just developing a mine plan right now. We've got a schedule developed, and we're just working on the development and infrastructure plan to prepare a pathway for 100,000 ounce per year production. We're staging into this over the next couple of years, starting off at quite a small rate in the 20 to 30,000 ounce per year, and then ramping that over time within 3 or 4 years to be hitting 100,000 ounce. We expect this is a long life mining project. We have a significant resource at the moment, about 1.7 million ounces, pathway to up to 2.5 million ounces. And we see a large amount of upside there that's been defined by historic drilling and historic drift assay sampling. So we think there's a long life project that can be built here over time. And we want to use this income, this cash flow, this gold production to be able to self-fund ourselves and build a solid multi-asset growth strategy. We have a secondary project, the Ladner Gold Project, which has a significant resource, nearly 700,000 ounces. We've got well-defined drill targets there and a ongoing soil and mapping project. That project, again, is fully permitted. So we'd want to be able to use production here to be able to build up multiple producing assets over the next several years. What are the catalysts that we've got coming up over the next 12 months or so? We've already surpassed some pretty strong catalysts. Our inaugural resource, we drilled a significant amount of drilling since acquiring the asset, 150,000 meters plus went into the project. We were able to develop our resource and get out a 43-101 compliant statement and secure funding, 31.25 million US, so around about 40 million Canadian. We just closed that in June of this year, so very recently. So now we're starting to ramp up with our plan. In Q3, we'll be starting our resource conversion drilling. Combined and dovetailed in with that are some engineering studies to complete our mine plan and inform the government of what that mine plan is. Again, we're fully permitted, so it's just a notification scenario. And then initiate our underground access development. This is to access our year one stopes and also to provide us drill base for our resource conversion drilling. We're looking at about 10 to 15,000 meters of resource conversion drilling. The majority of this will be conducted from underground, so relatively short holes defining the vein up into M&I category. Q4, we're looking at finalising an ore sale agreement. So one of the reasons we can fast track our project from exploration to development is that we're not looking on funding and installing a mill and processing plant. One of the big benefits we have with the location of our project in south central British Columbia is that we have highway access to multiple milling facilities that we can truck our ore to. So we just need to do a primary crush, load up the trucks, send it to the ore. So this is very cost effective and really reduces our timeline, allows us to circumvent the Lassonde curve and go immediately from exploration to production. Combined with this, we'll be finalising a First Nation bridging agreement. We currently have a exploration agreement and we want to upgrade that agreement. And it'll also be dovetailed with a trucking agreement that we're negotiating right now with our First Nation partners and some regional trucking contractors. All this then leads into the hugest, the biggest, the most exciting catalyst, and that is what we're planning in Q1 to start our test production phase and to start trucking our ore and seeing some cash flow in first quarter of 2024. We're going to start at a relatively low rate at 100 to 150 tonnes a day, and then ramp that up over time to 300, 500, and then to 750 tonnes per day. So a very exciting 12 months laid out in front of Talisker Resources, and a lot of catalysts coming down the pipe. To take a step back here and have a look where our project is located, we're in British Columbia, and we're in south central British Columbia. Here's Vancouver down in the bottom left-hand corner. If we have any listeners in from Vancouver, any skiers will know Whistler up here to the north, up the Sea to Sky Highway. We've got highway access into Bralorne from Lillooet, Highway 40, Highway 1 out here past Hope. So we'll be talking about Bralorne here, which is our flagship. But if we get some time, we might put some questions on the large land package here, the Spencer's Bridge Gold Belt, about 200,000 hectares there, an emerging gold belt that we staked early on in the country's history and that we've explored like a major company and defined a whole series of drill targets. One of these, the Golden Hornet, resulted in a significant discovery at the start of last year, some very high-grade polymetallic gold-rich intercepts. Our Ladner Gold project, which is our second resource, fully permitted project, just sitting here near Hope, about an hour and a half drive on Highway 1 east of Vancouver. So we've got just under 700,000 ounces there. And if all goes well with our plan with Bralorne production, we'll start to drill off and increase that resource and look to take Ladner to production as well and become a multi-producing asset company. So what are the key points relative to Talisker? The key takeaways, take-homes. We're strongly capitalised with access to about $45 million to take the project forward. We're currently fully permitted, major mines permit, nothing more to be done in two of our assets. Great infrastructure that we've just talked about. Highway access, toll milling to toll milling facilities. We've also got connections to grid power, a lot of great facilities, things that cost a lot of money when you're in the transition phase from exploration to production. We've got very strong leadership as an exploration company. Our group has discovered over 50 million ounces, nearly 60 million ounces. We've just been increasing the capacity of our mine development and production team. We brought on a great general manager, and we're about to announce the addition of a vice president of technical services. So bringing a very strong team to augment our very strong existing exploration team. We've got a growing resource base at the Bralorne Gold Project. Our average resource there, 1.7 million ounces at 6.4 grams. Majority of that's inferred category. Our indicated category, we're seeing at 8 grams per tonne. So we see an increase in the grade as we increase our drill density. We believe that we've got multi-million ounce potential simply by following the veins that we've already defined as resource, down depth and along strike. A large pipeline of existing projects that can feed into our production pipeline as we transition to a production company. And then finally, and most importantly, jurisdiction. These are all Canadian projects. Very safe, rule of law, a great place to invest and develop mines. The Bralorne Gold Project, our flagship, we've just discussed the resource there. We acquired this asset right at the end of 2019. And since then, we've done 150,000 metres worth of drilling. We've defined 86 veins. 75 of these veins are open in all directions. The resource that we've defined, this 1.7 million ounces, is very shallow, from surface to about 700 metres depth. So a lot of upside in this deposit type to continue this down to mineable depths, 2 to 2.5 kilometres. We've confirmed mineralisation at least to 2 kilometres, but we expect this to be mineable well beyond that. Great recovery, 86%, 65% of that is free gold coming out in the gravity circuit. We've got a large land package, something we did very early on, stake all the ground on the whole trend, on the whole suture, 14,000 hectares in the brownfields camp. There's another 47 gold occurrences along this 33-kilometre trend, many of which haven't had any modern exploration over the last 50 years. So we see a clear pathway to plus 5 million ounces at this fully permitted Canadian asset. So the value proposition's quite clear. Strongly capitalised. We have the capital that we need to transition into production simply because we're not building a mill. We're not building a processing plant. We're trucking to existing facilities in the infrastructure-rich South Central British Columbia. We're currently trading below cash. We're probably not the only ones in the market. The junior market has done a very tough time over the last year or 18 months. And if you're investors in the gold market, you would have seen that disconnect between the gold price and junior explorers. Critically for us, we're actually trading below our cash value. So it's a great opportunity to come in, even if we weren't transitioning to production. Strong resource base, lots of good assets, lots of undervalued secondary assets as we head towards our analyst coverage. Many of you might have read the Red Cloud analyst report done by Tim targeting 40 cents. So the bottom line is Bralorne's a well sought after, long life, high grade, permitted Canadian asset. Having a look at our share structure here, we've done a lot of transactions and put a lot of capital into our project. So we've got a significant amount of shares out, fully diluted. We're just had approved by shareholders to do a 5-to-1 rollback, which we're in the process of activating. So that'll be coming relatively soon. You'll see we've got a very strong, robust shareholder base. Our largest shareholder is New Gold. They own 30% currently, but they've got pro rata rights to remain at 14.9%. The other big chunk of our shareholders are institutional. Some big names in there: Franklin Templeton, Equinox Partners, RBC, Gold 2000 with Conwave, Merck, several of the Sprott funds, Sprott US. So some very strong shareholder register backing this project as we take it across the transition. We've touched very quickly on our corporate leadership. The key takeaway is it's a very serious scientific team. We're all big company trained, the likes of BHP, Anglo American, Anglo Gold Ashanti, all PhD and master's level. So we take our exploration and development very seriously, and we put our science right behind the projects and have resulting success relative to that. A few of the characteristics of Bralorne in the last couple of minutes that we've got left. Bralorne was a historic gold producer in British Columbia. It was actually and still remains the largest gold producer in Western Canada. It's been closed for 50 years, but is still the #1 gold producer in BC. There was 40 years of continuous production, a total of 4.2 million ounces produced at an average grade of 17.7 grams. This equated to 2,300 ounces per vertical meter. So it's a very high grade, very systematic project that has been in production for a long time, and we can see these characteristics flowing forward as we transition to take Bralorne back into production. In the final slide here, we'll just have a look at our inaugural mineral resource. from A to B in this long section, that's about 5.5 kilometers. So this is a massive deposit. Where we've drilled is just majority to about 700 meters. The scale bar on the left, this is 2 kilometers depth. So we're talking about a deposit that's at least 5.5 by 2 kilometer panel of gold mineralization. What we've developed is very shallow, and what we can see historically in grey, that's 4 million ounces of production. So you can see why in these big gaps, these big holes around here, we can see that there's a lot of opportunity to expand this project and to develop a long life, high grade, very high cash margin gold producer. Tim, I think my time's up there.
Great. Sounds great, Terry. Thank you very much for the informative presentation. We'll now move on to the Q&A portion of the webinar. Reminder to everyone on the line, you can type your questions into the chat box at any time. We already do have a couple of good questions here. First, are you able to get drills and experienced drillers, as there's been a bit of a shortage in the industry?
Yes, we can. We use, in general, been using Foraco. We used Atlas, which is another drill company. Both of these have significant underground experience. Atlas has been drilling up at New Afton regularly underground, and Foraco, they're an international company, so they can source rigs and people to come and drill the projects for us. Market's actually been pretty quiet. We've got 3 or 4 drill rigs sitting at site at the moment. So I think with the downturn and challenges with access to capital in the general marketplace, availability is very good for high quality people and high quality equipment.
Great. One question here. If things go as expected, when would be first production?
We're hoping sometime in Q1. If things go very well, that'll be January, February. If they don't go as well, it'll be March, April. But our current plan is to have our first production in Q1, and that's the development cycle that we're working on right now. So everything looks like it'll go to plan.
Great. And one follow-up question to that: the areas that are targeted for initial production, are they higher grade or are they about average grade with regards to the resource?
So our mine plan is a subset of the resource. Currently in the mine plan, it's about 1.1 million ounces, grading at around about 8 grams on average across life of mine. We're taking the tact of tackling a higher grade profile early in the project life. So for the first couple of years, the first 3 or 4 years, we're looking at about a 12 to 13 gram average in that critical payback period.
Great. And we did have one question along similar lines that just came in, but can you comment on what you believe the upgrade may be on the grade, since history showed a 17 gram a ton average?
Yeah, look, that's a very good question. The historic production, let's call it 18 grams. It's an orogenic gold deposit, so we don't expect the average grade to change. And there's been over 4 million ounces produced, so it's fairly consistent that we can expect that grade in situ. And certainly our in situ numbers, before we put mining shapes or stope optimization around them, sits around 17 to 18 grams. We're expecting to dilute that about 50%. So historically it was mined shrinkage stope, so guys crawling into little gaps with picks and shovels, hand drilling. So it was quite challenging and very expensive to be able to do that, a lot of labor cost. So we're looking at long hole production, long holes mechanized, so you'll take out sort of a minimum 1.8 meters worth of development. So we're expecting about 50% dilution to come in. So that brings it back to what we see in our indicated stope optimized grade, which is about 8 or 9 grams, which is about half the historic.
Okay, great. Is there any gold mineralization in the wall rock, or is that pretty barren?
No, we see well-developed mineralized halos around the veins. We model that as separate ore bodies in our resource statement. So we did the main part of the ore body, which is the vein, and then we do the fracture halo around it. So the average of that resource was about 1.5 grams per ton. And its size varies depending on what the host rock is. If it's at Bralorne, it's in a diorite, and that can be up to 1.5 meters, 3 meters either side of the vein. Down at Pioneer, it can be up to 40 meters around the vein. So it just depends where it is. Certainly, we're expecting that to help us with that dilution, because we almost pay for our mining costs with the gold in the wall rock. But in Pioneer, we're interested in looking at that as its own deposit type. Can we build a bigger bulk tonnage thing? And that'll be something we'll be investigating over the next couple of years. So a larger stope, lower grade deposit, as well as the high grade, what we see at Bralorne and King.
Okay. And a little bit of a follow-up there, would you, because you're looking to truck the ore, would you use some, would you separate that out and stockpile some of the lower grade material and just truck the higher grade material? Maybe with thoughts of building a mill, down the road where you might process that lower grade, or how, I guess, what approach would you take to that?
So the easiest way to manage that is with ore sorting. Matt and other members of the team are putting together an ore sorting study right now as we speak. And we expect to get a pretty good mass pull, or pretty good separation. The quartz veins are white, and the wall rocks, are dark color. It's black or grey. So simply optically, it should be relatively easy to separate that. Certainly something we'd have to have a look at. The main challenge with long-term storage of stockpiles on surface is just dealing with the government. The government really doesn't like long-term stockpiles sitting at surface. It's certainly something that we'd look at. We'd be interested in investigating full feasibility for on-site production within the next 3 or 4 years. So it wouldn't be a long time frame to manage that. So I think that's a pretty good suggestion, whoever proposed that.
Sure. And we did have one question come in following up on that. Are you permitted for a mill or grandfathered for on-site facilities?
Yes, we are. We're currently permitted for a small-scale mill. Throughout the life of Bralorne, when it was in production, there was multiple mills on site. The largest was sort of 500 tonnes a day. The most recent one under our current permit is small scale. It was 100 tonne a day. They were in the process of upgrading that to 400. Really, it's just an amendment of our permit to increase that rate, increase the production rate, and increase the processing rate.
Okay, great. Shifting directions a little here, we have a question on the Sprott on the streaming agreement. Do you expect to buy down the streams or can you tell us a little more about how the buyback works on that?
Sure. Yeah. At the moment, we're only planning on taking the first 2 draws, and as part of the agreement, and one of the reasons why we went with Sprott was that we didn't want to leave a long-term royalty burden on the project. So we've got 2 reduction facilities in there. The first is a buyback, and the buyback is we can buy back up to 50% of the royalty, and we've got basically a 5-year period to be able to do that. And we can buy back whatever percentage we like or whenever we'd like to do it. So that'll be one of our focuses. Once we've got cash flow positive and built up a bank, we need to balance that out with, well, if we're going to go milling locally and we need 50 million for a mill, how much of that do we put into royalty buyback and how much into the mill? So all that'll come out with our planning as we take the project forward. After that period, there's an additional royalty reduction of 50% at no cost, and that's post-production of 1.5 million ounces. So depending on what the royalty is at that time, if we've already taken 50% buyback, then we'll be reducing it again by another 50%. So it'll go down to 25% of the original royalty amount.
Okay, great. Yeah, and I apologize, I misspoke there because I said streaming, but it's a royalty, not a stream.
Yes, that's correct. Yeah.
And then shifting here a little bit to other plans, given your portfolio of projects, how will you prioritize spending? Will you be conducting exploration on Ladner and other earlier stage prospects over the next year or two?
It all just depends on our access to cash and access to capital. At the moment, we're taking a conservative approach. We really want to put our focus onto Bralorne, get Bralorne buttoned down in systematic production and building up cash flow. If that gives us ability to not have to go back to market for equity raises, or at least reduce the amount of equity raises through self-funding, then we can start to accelerate these projects. Currently at Ladner, we started off a soil program this year, and we've also got a mapping program to understand the controls of mineralization there at our Ladner project. Our Golden Hornet project, it's on hold at the moment. We did have some great discovery intercepts. We drilled 14 holes. All of them hit sulfide mineralization, so we're super excited about that, and we'd like to get back there and do work. Our Dora project has been permitted, so we're keen to be able to get in there and drill. We've got some good results, up to 8 grams at surface. And then finally, our Nova Cyclone vein cluster, about a 5-kilometre vein field, brand new grassroots discovery, never been drilled, never been sampled before we got there, discovered by stream sediment, old school exploration. We're very keen to finalise the permitting process and put some drill holes there. So if the market turns around and things go very well, then I think we can start to accelerate that pipeline and bring things in behind Bralorne, behind Ladner, behind Golden Hornet, and really build up a proper mining company.
Great. And we have one question here. Will you be self-funding once your initial mining starts, or how would you look to finance full production up to, say, 100,000 ounces a year?
At the moment, our plan is to try as hard as we can to be self-funding. Really, that's why we're doing this. We're doing this because there's challenging markets for equity. The debt market's very expensive, so we want to be able to transition into that. It's probably too early, Tim, to make the comment that yes, we're totally going to be self-funding. It's too early to say until we've got some production profiles, until we're confirmed on our schedule, until we've done our resource conversion over the next few months. It's a bit early to say, but certainly that's our plan. That's where we'd like to go. We'd like to become self-funding to be able to take Bralorne through the engineering studies into on-site production, exploration at Ladner. That's certainly the plan that we'd like to take.
Great. And one follow-up on that, obviously the studies are still to be finished, but about how much would it cost to bring initial production online?
In total, we're expecting around about 20 million. That includes resource conversion, drilling, and development work.
Great. And one question that's popular, you did mention it in the presentation, but about how much cash do you have on hand now, and how far will that last with your current plans?
So we've at the moment just taken the first draw, which was 7 million US, so about 10 million or so Canadian. We're looking at probably finalising the second draw October, November, and those two draws together is 18,750,000, and we've also got about a 4 million flow through component that we're spending on drilling. We need to have that spent by this year. So in total, that puts money in the pocket at about in Canadian puts it about around the mid-20s, 23 or 24 million. We envisage at this stage that'll take us through to production in Q1. Depending on what the market conditions are, we might look to take some charity flow through to assist with the drilling. Just depends on the market and how our share price looks at the way the market currently is with access to capital. It's pretty tough, so we'll take a leaner approach. But if the market booms, then we'd certainly look at taking a little bit to offset that charity flow at cheaper equity rates.
Great. I think that's all the questions we have. I guess one general follow-up question I'll ask to kind of top things off. Just to review, what news might we expect to have over the coming months from Talisker?
Well, the main couple of catalysts or news coming out will be coming out of our drill program. So we're drilling planned about 10 to 15,000 meters of drilling. Most of that from underground, so there'll be some pretty good results coming out from that. We'll be finalising our ore sale agreement, which is a major catalyst to be able to truck our ore. We're hoping by Q1 to be trucking our stockpile. We've got a stockpile of about 6,000 tonnes, at about 5 grams. So we'd like to be able to truck that material and process it. We're currently finalising the engineering and infrastructure plans, and we'll be starting the development within a month or two to get to the year one stopes. And we expect to be hitting those year one stopes in Q1 and starting to truck that ore in Q1. So hopefully within 6 months, we'll be a mining company instead of an exploration company.
Great. Well, I'd like to again thank Terry Harbort and Matt Filgate for presenting today, and thank you everyone on the line for tuning in. Just a reminder that Red Cloud Securities will be back next Wednesday when our webinar series continues with NextGen Energy presenting Wednesday, July 26th at 2 p.m. Eastern Time. Have a great rest of your day.